Welcome back to the Crypto Trends Podcast, where we cover all things cryptocurrency, blockchain, Web 3.0, and AI. I'm Robert Croak, and I'm joined by my co-host, Armando Pantoja. Both of us and our amazing team are excited to bring you the best information, guidance, and strategies each and every Wednesday. So follow along and always remember to take notes and take action. In this episode, we have a lot of big topics to cover, and we're going to begin by talking about the recent dip in Bitcoin following its all-time highs and what that means for the market. Following that, we're going to discuss all the signs we see which suggest this cycle is going to be different than prior cycles and how you can position yourself for success around that. Lastly, we're going to cover two major stories that are happening right now, then wrap up by answering questions asked by you, our amazing audience. Be sure to watch all the way through, as there may be a new low-cap altcoin that we call out towards the end of the show. If you've been enjoying the podcast, please be sure to give us a 5-star review and leave a comment to let us know your thoughts. Now let's dive into talking point number one, and that is Bitcoin takes a dip. Armando, take us into talking point number one, which is Bitcoin takes a dip, and tell us what you make of this latest price action for Bitcoin.
You know what's crazy is that we've been getting a lot of DMs, a lot of messages that people are panicking, right? Because it's funny how people's excitement can change in as little as a week. Bitcoin went from 38,000 to 73,000 with almost no resistance. And everybody's panicking because it dropped a little bit. Now, what's happening right now with Bitcoin is actually healthy for the asset's price, because we don't want to see an asset go straight up. That's creating a bubble. We want to see retractions. We want to see resistance. We want to see some corrections, because that's healthy for the market. One thing people need to keep in mind is that once Bitcoin has historically, once Bitcoin has passed its all-time high, that becomes support for the next cycle, which means in layman's terms that this is probably the lowest you're going to be able to get Bitcoin for in the next 4 years, maybe even forever.
Yeah, I'd like to speak to that. While we're still very bullish on Bitcoin, people must understand that nothing goes in a straight line up, even if that's how it looks on the Coinbase graph, because markets simply just don't work that way. Bitcoin isn't going to go straight to 100,000, and it isn't going to make you rich overnight. There's just really a natural development that needs to take place, and I think that's just what we're seeing right now in the markets. You know, you talk about people freaking out when there was no resistance all the way up to 73,000 and we hit these all-time highs. And I promise you, just like NVIDIA and all of our other callouts, as soon as there's a 5% correction, they panic, DM us, send carrier pigeons, come to our houses and ask us what to do over a 5 or a 10% correction. And they just need to, everyone listening, calm down and understand this is great for the cycle and great for the bull run, and it's just something you have to get used to.
Yeah, up cycles are impulses and corrections. That's how it works. So for the people who are freaking out and asking us, should they sell? The answer is no, because we're at all-time highs before the halving. This has never happened before. It actually is a sign that we're just getting started.
Exactly, Armando. And if anything, everyone listening should use these dips as opportunities to buy more crypto. How many of you felt FOMO about missing out on coins that were exploding? And how many of you didn't get as much into the markets as you had planned on putting in? So you have to look at these dips as a great opportunity to dollar cost average into the market, as you always should be doing. Armando, do you agree on this?
Yeah, I agree with that. I think that the way in which you'd approach it, if I was somebody who wasn't in the market yet, I would start taking a good look at altcoins right now. Bitcoin, of course, is a safe haven, but it's great if you're looking to hold forever or looking to hold long term. However, if you're looking to profit, altcoins may be a good play.
Yeah, I want to explain to the audience what that means. While Bitcoin still has a 1, 2, 3x potential in this cycle from the current levels, there are still plenty of altcoins that we believe could 5, 10, 20, and even 50x from their current levels. And that's why it's just really good to understand where these profit levels are in these cycles and where the opportunities are that I'd be looking for Thus, if there is an opportunity to profit from these cycles, the opportunity I'd be looking for would be in altcoins. And that's what's even better about this when Bitcoin dips, is that altcoins generally dip harder, allowing you to get more favorable dollar cost averaging entries into your favorite altcoins, many of which we've been calling out in previous episodes. So I just think everyone needs to look at this as a hell yeah moment of opportunity rather than an oh shit moment because they went down 5 or 10%, because we're not even to the halving yet. And we've made so much money in the last 6, 8, 10 months in the Bitcoin and crypto markets.
Yeah, when Bitcoin falls, that's an opportunity. And just like Robert said, he's 100% correct, is that altcoins tend to have an exaggerated correlation with Bitcoin. So Bitcoin goes up a little, they go up a lot. Bitcoin falls a little, they go down a lot. So when they fall, that's a great dollar cost average or a buying opportunity because they're going to go up at a higher rate. So you will make more on altcoins in down cycles than you would in Bitcoin in down cycles. So for somebody who's just listening for the first time, Robert, trying to figure out which altcoins to buy, which ones would you suggest?
Yeah, I think it really comes down to everyone listening needs to just go back through the previous episodes and create a list of all the plays we've already provided. I think it's up to them to do the work. We've already done the work with all the research we do. The team crushes it. Max crushes it. I'd really suggest everyone just goes back through the previous episodes, create a list of all the plays we've already provided. While you may have missed the entries we provided in the past, these are still projects that we really believe in and haven't sold our positions in for a very long time. I mean, you think of Render, AGIX, Fetch AI. Some of these I've been in for 2-3 years, as have you, and they're still growing. I think one of the biggest components of this is not trying to time the market and being time in the market, because so many people think that there has to be this euphoria from our call outs or the plays or what they're buying, and it really should not be that way. Trust me, it's worth your time to take notes on these call outs, be long, and especially when you get pullback opportunities like we've had in the last few days.
Yeah, do the opposite of what the crowds are doing. This is one thing I like to add to that. If you don't have time to go back through all our episodes, understand that AI tokens, Solana meme coins, gaming coins, and tokenization coins are going to be major sectors that we're going to be talking about. So if you're looking to get involved, you can start right there.
Yes, and if you have any coins you'd like us to review for next week's episode, go to the comments section of the podcast, drop a coin in there, and let us review it, because remember, there's thousands of coins out there. We're not looking every single day for a new coin just because there's so many great projects already. And I just truly believe that sometimes people get spread so thin over so many coins where they're putting $100 into 20 coins rather than 200 or 500 into a few coins, because then that way you can really maximize your gains when you're right. So we want to see diversity, but we don't want to see people spread so thin over 50 coins. I just don't think that's a good way to build your portfolio. So before we go into our next talking point, I want to take a moment and introduce our title sponsor, Proppy. So whether you're a real estate professional looking to modernize your practice or a buyer seller eager to navigate the market with the latest technology, Proppy offers an unparalleled platform that simplifies, secures, and revolutionizes real estate transactions. Get ahead of the curve and explore how Proppy can transform your real estate experience today. For more info, go to proppy.com. As you all know, we've been talking about Proppy a lot lately. I love the coin, I like the company, and I really like what they're doing for the real estate industry. We had some great calls with them last week on Twitter Space, and they're just really crushing it, and I'm so excited for the future of Proppy. So that leads us into talking point number 2. This cycle is different. And this is very, very important that everyone follows along and listens to this. Last week, we talked about Bitcoin breaking all-time highs pre-halving for the first time ever and entering into price discovery. And this week, we're talking about Bitcoin breaking back below the previous all-time high after entering into price discovery, also for the first time ever, hence the title of this section. So Armando, break it down. What do you make of this, and what is different for our listeners?
Yeah, this time is incredible. Like we said before in a previous episode, I never thought, you did, I didn't, that Bitcoin would reach all-time high before the halving. It's never happened before in the history of cryptocurrency. It's never happened. So this is the first time that it's happened. This time is truly different. Between Robert and I, we've sat through 3 cycles to this point. We've never seen anything like this so far. It's always been a long bear market followed by a relief rally, which was followed by a correction into the halving. And then Bitcoin would then go on to all-time highs. Yeah, this time has been a lot different. And I think it's the obvious reason, institutional involvement. We've seen the banks, the elite, and the rich enter the market like they've never done before. And this has happened before the halving.
Yeah, exactly. We talked about this last week a little bit, and it seems as if our audience wanted us to go into more detail on this subject. Obviously, institutional demand created pre-halving buying pressure that had never been seen before. In instances where there'd be pre-halving dips in prior markets, institutions were here to buy up all the dips this time. And I think that's the defining difference in today's market and why things are acting different.
And I like what you said. Institutions are buying into the dips. That's what they do because they have the knowledge, they have the research, they have the experience. And that's exactly what we're saying you guys should look at doing, because there's always an opportunity when there's a dip to get in at a good price. Historically, institutions, like we said, came after the halving, when the supply dynamic got a little bit better. But it was a different time then. They were investing in Bitcoin itself. They were not creating products based on Bitcoin. They were not forced to have to buy Bitcoin. This time is significantly different because they're forced to buy Bitcoin because they're now creating products like ETFs.
Yeah, I think the key word here for this point is forced. That's why we're seeing all of this buying pressure, because of the incoming funds by the billions into the ETFs. Therefore, this halving cycle and leading up to it and this price correction we're seeing in the last few days is because we've never seen this kind of buying pressure before. I think that's one of the key things to note here, but go ahead.
And now they have these crypto products, right? They're forced, they have to buy up to access Bitcoin before the retail crowd gets involved. Because they know once retail comes in, all bets off, Bitcoin's going over 100,000. And we know almost for a fact that retail involvement hasn't started because of on-chain analysis. What we're seeing on-chain is that bigger wallets are getting bigger. They're accumulating Bitcoin. We don't see any new wallets being created, which would indicate retail involvement or retail entry into the space. So we know that the big banks, the elite and the rich, are accumulating Bitcoin into these large wallets.
Yeah, exactly. I think what most people don't realize yet is that retail has really only just begun entering the space. That's how early we still are. We talk about this all the time. But if you remember, though, if you don't take action on these dips, you will miss out, because every day I'm filled with DMs and messages and requests to talk about what do I do? What do I do? And I don't know how many times we can reiterate that you just keep buying the dips, you dollar cost average, and you really just make sure that you're getting into the entry points that you can to make sure you don't miss out on this big run. And so it really just tells us that institutions will continue to buy the dips. And if you don't, you'll be just left wondering why you let yourself miss out on the opportunity to buy in again. So many of you, when Bitcoin was 10,000, I told you to buy, you didn't listen. Then when it corrected to 7,000, you said, oh, I'm going to buy now, but wait a minute, what if it crashes? And it's a vicious cycle that you go through all the time. And I just know that during this cycle, if you miss out, I'm going to spend the next 2 years repeating to all of you again that it's all about time in the market and not timing the market. That is why you dollar cost average and you keep on moving. If you believe in the sector like we do, and you believe of where it's going from an adoption and disruption perspective, you don't worry about the day-to-day price action. That's it. End of story.
Yeah, and like I said, is that we're very early, and we have to make that clear. And one of the ways I tell people to know that we're very early is go to work, ask how many people are invested in Bitcoin.
Right.
95% are going to say they're not. Now, once we get later on in this phase, almost everybody will be one way or another. But we talked about earlier buying those dips, right? How institutions work and how they react to those dips. They buy them. They're not scared. They buy those dips. So, and we talked about which types of altcoins you should get involved in during this next bull run. You have any insight on that?
Yeah, I might add that we bring all this information for free each and every week, and because we want all of you to win just like we want to win. And we understand that the next 12 to 18 months will provide the types of opportunities that really do only come once or twice in a lifetime. And we feel as if it's our responsibility to make sure that you get all of this ingrained into your brain. So please always take notes and take action. I think the last thing we must do is to look at some of the top stories and analyze what they mean for the market and how we can profit off of them in the long term. Remember, when in doubt, zoom out. So this brings us to the very important talking point number 3. The top stories in crypto from this week. I'm very excited about this section because I know that we just have to stay on top of these narratives and make sure that we're ahead of the curve. Because remember, from an investment perspective, we don't have to be first to an investment. We just have to be ahead of the market, ahead of the curve. So if we're ahead of 90% of the people out there when it comes to a new coin or a new narrative, we're always going to win because we don't have to be first. We just have to beat the masses. And that is very, very important. So Armando, take our audience into the first story that we'd like to discuss today.
So me and you've both been in crypto for 10 years, 10 plus years. Early in crypto, I remember is that the biggest places on earth that were involved in cryptocurrency was Europe and Asia. It wasn't a lot of people here in the United States. We had to go to Europe and Asia to go to conferences, to meet up with people, to make contacts. China is a big, big country. China has 1.5 billion people, a large percentage of the world's population. You would have to be a fool not to take that into account. So there's an analyst out there, and he said that China's involvement is going to send Bitcoin to over 1 million by 2028.
Yeah, let's dive into this. He is not the only one that has claimed a $1 million Bitcoin by 2028, 2030. We've heard Cathie Woods allude to it, Michael Saylor. So that's something to really consider in this market when so many people feel they missed the run on Bitcoin. Think about that. If we're at 70,000, 68,000, depending on where we're at for this broadcast date, think about what that means from a return perspective. If we get to that 600, 700,000 $1 million Bitcoin a piece, that means we still have a 10, 12, 13x still left in Bitcoin, and people think it's too late.
Yeah, I mean, 60 to 1 million is almost like 15 times, 16 times. So it's still an incredible investment. Even if you look at historically how all investments perform, it still outperforms almost every major investment that most people know about. Herbert Sim, one of the biggest Bitcoin influencers out there, had something to say about large Chinese investors. He claims he works with a lot of these investors, and he thinks that a lot of them have yet to even enter the space. We know in 2021, China actually banned mining in the country. Sim says that China leads Bitcoin bull runs, not the United States. And he's also predicted publicly that we will reach $1 million. He's been saying this since 2017. What most people don't realize is this cycle is different. I know we keep repeating that throughout the episode, but I'm trying to reiterate it. Robert is trying to make sure you understand that this time is truly different. There will be a mad rush by organizations, countries, and banks to control Bitcoin, control the hash rate. Every single country, bank, large organization on earth will soon be forced, and we use that word a lot today too, forced to buy Bitcoin because the Bitcoin tends to favor early adopters. We saw what happened with El Salvador. El Salvador is projected to be one of the richest countries on earth due to its Bitcoin investments. Bitcoin favors early adopters. What do you think about this, Robert?
Like he said, the Chinese markets have usually led the bull runs, and this time I believe it will be a bit more balanced between U.S. markets and Chinese markets as large institutions in the U.S. are now involved. To me, this is yet another reason why U.S. institutions have been buying the dips. It's to beat large investors to the punch since these dips have been so quick to recover. And that just really all makes sense to me. And I believe that is the narrative we need to follow.
Yeah, and it's interesting that a lot of analysts are saying that 69,000 will be the base of this next bull run. And that goes along with what we've been talking about earlier in the episode, is that the previous high becomes support for the next cycle. That along with Chinese investors starting to get in now is going to create a very, very strong support line at 69,000. Institutional investors in China and the U.S. will be buying up all the supply to and into this halving.
If you don't act, you will miss this, as the parties involved are major corporations and market makers, and they have shown that they are here to stay. We're not going back to the behind the scenes buying of crypto and Bitcoin. It is worldwide. It is on the big stage now, and there is nothing left to hide. And that's why I think we're just going to keep moving and moving in the right direction in these markets. So this begs the question: could we see a super cycle for Bitcoin? Armando, break it down. Tell the listeners what you think.
I've been talking about a super cycle for the last 2 years. I strongly believe that we're going to move into a super cycle in Bitcoin. Because if you look at the dynamics of what's happening, is that last cycle was stunted due to COVID and the Ukraine war. I predicted 100K for the top in the last cycle. We didn't hit it. So I think that this cycle has to take on some of that momentum from last cycle, push it into this cycle, creating a super cycle. This could be possibly the biggest and last great move of Bitcoin in history going forward, and it could be the theme of the new market.
Yeah, we'll continue to monitor this as the bull market continues to develop, and more stories like this continue to come out. Very, very exciting times. So let me take us into the other main story we've been tracking this week, and that is Solana network activity surpasses Ethereum. The Solana network has been exploding in the last couple weeks, which has also been reflected in the skyrocketing prices of the Solana coin itself. So the main reason the Solana network activity has been through the roof is because of the Solana meme coin craze that everyone is following, and everyone is trying to throw a dart at and pick which meme coin is the best. And that's been a difficult one to figure out. And if you look at it, the Solana blockchain DEX volume is currently at an all-time high, exceeding $3.5 billion in a 24-hour window. And the most notable meme coins that exploded on Solana are Bonk, Dog with Hat, and Book of Meme, three that everyone keep talking about. So I personally have traded meme coins on Solana, and it's extremely easy to do. Additionally, there are barely any fees, unlike Ethereum, and it's lightning fast to transact on. So what do you make of this news, Armando? And what do you make of the explosion of meme coins? We can't seem to get it off our plate. It seems like it's all everyone wants to talk about is the meme coin explosion. Walk us through it.
Now, a lot of people are using this, I call it a mini meme coin explosion because it hasn't reached max growth yet. People are using this to say that we must be at the top.
Yep.
If everybody's talking about meme coins, people are making a lot of money, we must be at the top. I think those people are greatly mistaken. Historically, that can be true, but remember, this cycle is doing things that it's never done before. How can Bitcoin even be at a top if the halving hasn't even occurred yet? What the Solana meme craze shows me is the evolution of the market, which is a direct result of innovation in this space. By creating meme coins, meme coin platforms at low fees, Solana has given access to a lot of people to trade their favorite meme coins.
Yeah, I definitely agree with you on that having these inexpensive coins and trades and low fees really spikes euphoria for people wanting to YOLO that money, that $100, that $500, whatever it is they have, rather than following kind of the things that we educate them on. This becomes more gambling than it is investing. So I just always urge everyone to have a thesis, really plot out their plan, and don't just go YOLOing all their money into meme coins. I'm totally okay with them investing in meme coins as long as it's a small portion of their overall portfolio.
I expect Solana meme coins to be its own sector this time. And while trading these coins, remember, it's extremely risky. It can also be profitable. And I think that this sector is going to create a lot of millionaires. You just have to practice risk management. You have to do your own research, and you have to be careful.
Yeah, I completely agree with you that it shows an evolution of the space. Innovation in the blockchain is always allowing more participants to become involved, and how they choose to involve themselves in crypto, well, that's up to them. We can't, force anyone to do anything. We just try to provide the most information we can to give you the best investment thesis we can help you create. So while I wouldn't put more than a small percentage of my portfolio into meme coins, we're excited to see how this sector continues to evolve in the crypto space. Have you been trading Solana meme coins? If so, we want you to head to the podcast comments. Let us know which meme coins you've been trading and if that has been a profitable endeavor for you thus far. This segues us into our last section, which is answering questions by you, our amazing audience.
Dan asked, great info. Can you let us know if you still like ENS and Fetch AI and why you do, and if you're still holding them? Now, just like we talked about earlier in the episode, is that there's been a slight retraction. That doesn't mean we panic and sell everything. We still like ENS. We still like Fetch. They still both have great futures going forward. It's just a small retraction. Remember, altcoins will take on more losses as opposed to Bitcoin in a overall market retraction. So that we still believe in those just as much as we did last week, last month, and going into the future.
Yes, and it's just important for everyone to understand. We're not sitting here, and neither is any of our team or any of you that follow along and listen. We're not sitting here getting in and getting out trying to time the market. If we believe in an investment and our thesis around the project, we're in it for the long term. We're not trying to time the market and getting in and getting out. And many of the fake gurus out there that are telling you to do that and take profits every couple days, they're forgetting one critical point. Is that is a taxable event, and you better understand short-term capital gains and long-term capital gains. Otherwise, you're going to miss huge profits while you're trying to time in and out of the market, and you're forgetting about your taxes that you're going to owe on those gains. And many times, you're just going to be trading money because you're listening to people that aren't telling you how to really do this and build wealth in the crypto system and crypto investing.
I want to add on to that also is that if you're not aware and conscious of the tax burden, you could be actually taking a loss on something that appeared to be a win. There's many cases where a short-term gain will be twice as much. So if you're going in and out like that, you may think you're winning and then that tax bill comes and you're actually losing. So it's important to be conscious of what the taxes are on your trades.
Yeah, I called out 3 cryptocurrency influencers just this week. One of them was telling his audience that he's selling most of his crypto right now, and he's doing so and taking profits every week or two. And I called him out on it and really wanted him to understand that his audience needs to know the difference between short-term capital gains and long-term capital gains, because you're right. They could be taking profits, but not taking enough profits as a percentage of the asset and the investment, and therefore losing money because of the taxes, short-term or long-term capital gains. And this is a big issue that I think we should cover in the next episode.
I agree with that.
So that leads us to number 2. Dean asked, what are your favorite gaming coins that you hold right now, and do you think they will continue to rise? Well, Dean, great question. I wouldn't still hold them if I didn't believe they will continue to rise. And the 3 that are my favorites, and I believe everyone that's here today in the studio believes, is Nakamoto Games, Beam, and Immutable X. These 3 are killers. I think they have great long-term upside. I love them and add to all 3 positions every week.
Elisa asked, do you have any new low cap altcoins that you've purchased and where did you buy them? Well, there's one that I've just discovered, Aegis AI. Now, one of the biggest problems of Ethereum is scaling, right? We all know that. We see it in the gas fees. But the other problem is that anybody can write code on the Ethereum blockchain. So what does that cause? A lot of bad code. So there's a project out there that's working to solve this problem, and it's called Aegis AI. What it does is it audits the blockchain for bad, buggy code, and it helps to correct that. Now, in order for Ethereum, and that's one of my favorite, it is my favorite crypto, to be honest. In order for Ethereum to go where it's going to go, it's going to need solutions like ENS, like Aegis AI, in order to scale to where it's going to be into the future. So I strongly believe in this, and I think it could be a good opportunity for a lot of people.
Yeah, I love it, and good call out from Max. Our team crushes it. And where to buy it, you can go through Coinbase Wallet right now to buy the coin, and we've been loading up on it, and you're here to hear it now. And you get to hear it now, so take a look. We love this coin. So the next question is asked by Curls. I believe that's what it is. When do you suggest stopping the DCA for this cycle dollar cost averaging? I would say it really depends on your investment thesis and objectives, Curls, and everyone listening. I always believe you should be dollar cost averaging because you should never try to time the markets. So many of you think that you have the magic wand or you own the crystal ball that no one else has, and you can time the markets, and you're usually the one that's trading money, or you miss the market bull runs altogether. So for me, I think right now is a great time to continue dollar cost averaging and work your way through these ups and downs as we really get moving into the bigger parts of this bull market. Because remember, we haven't even reached the halving yet. And although we've been preaching that this time is different, we still believe there's a big bull run ahead as adoption continues to rise and more money is pumped into the sector. I want to thank each and every one of you for listening and following along. You can find us on Instagram at Crypto Trends Podcast and on Spotify, Apple, and YouTube. We're so excited for 2024 and beyond and sharing all of our crypto insights with you. If you love the podcast, please share with a friend and give it a 5-star review, and we'll see you next week.